Hi, Warriors. Was today the BOE? Pound
That's
moved pretty
Thursday,
good.
buddy.
Wow.
We got
Okay.
inflation last night.
Wow, they really got to cable. Okay. Thank you, Blake. Uh, Good day, everybody. Steve, Kareem, Andrew, Simon. Simon, welcome to Face. Ingmar, Bran, K-Man's here, AJ, Ryan's here, Linda, how are you? Glenn, everyone doing okay? So we've made a couple stands around the 98 level in Dixie. We'll see. So why don't I start off with Brian? Pretty negative action here in cable, buddy. Can you hear me?
Oh, no, Ryan, you're on sign and you're
Oh,
muted.
no.
Okay, good morning, everybody.
Bloody Zoom has started muting me again. You must know something.
Oh, I wonder why. Only
yeah.
you.
Exactly.
Okay. All right.
Um,
So is this
yeah,
enough to say that maybe this whole rally that we've had from here might be terminating and that we could be ready for a decent leg to the downside to take out the 130 level?
that would be a bit of a stretch. We've had a bit of a turnaround in the dollar. It's found its footing. It's been getting a bit beat up over the last couple of weeks. But that jobs data and retail sales data yesterday, as expected, we had the Fed meeting. We had this data a week later, and it's a completely different picture.
Yeah.
The Fed was not as hawkish as the market wanted, and then we got NFP, which pretty much showed 52,000 gain in October,
Right.
if you strip out the government furlough jobs and whatever, and 64K in November. So it's pretty good, and the retail sales were good, and so the dollar's found its feet. Whether that can continue or not is the question from here, and that's the case that would send cable lower.
Okay, well, Canada got to the black line or missed it by a pip.
Got it.
Decent reaction there, right, bro?
Yeah, I took it yesterday because we touched it, couldn't get through, and I took it. The bounce hasn't been that. I'm not going to complain about it, but you compare the bounce here to the bounce or the dropping cable, euro, dollar, and the like. It's not been as pronounced, but other things going on in the Canadian dollar. But it's looking okay. I'll be worried if we go back down there.
Okay, maybe we just pull back and go again. Okay, any comment on the yen? Another graveyard save. They've defended this level, or someone has. This level's getting even bigger now because back here we weren't near the 50-day moving average. Now we have both the support level and the 50-day here. Maybe we're just going to blow it into test the highs here going into maybe it is going to be buy the rumor, sell the fact on an interest rate increase.
Yeah, that's still going to be the big story. I'm not really touching it here. I liked your support. I like the 155 support previously, and it's holding. But I'm not keen to get stuck into anything right now. I'm worried that if they do hike and they're not overly hawkish, yen starts weakening again, and that's when you'll probably get a move up back towards those highs, and then we'll be in full on intervention mode. In my opinion, if all the crosses are going as well.
I don't know if this is true, but I saw a video or a headline and then watch it that Buffett is actually buying yen. Have you guys heard that? Because he's worried about the dollar, huh?
He's been investing in Japanese trading houses for 2 years.
Okay, but
Japanese companies for 2 years.
Okay,
I think, all the way around.
He started somewhere October 2023.
I thought he was getting out of some of that stuff as well last year or beginning of this year.
Yeah, last year he added.
So he's long yen. He's already long yen.
Well, I mean, that remains to be seen. You
Yeah.
can be long companies without being long the currency, right?
I don't know. You know, kind of if you, unless you just, you know, exchange it every month, you do kind of deal with the, you know, the, you know, currency of the country your company's in. Anyway, I just wondered if anyone heard that. Because if he's doing that, he wants to be on the other side of the carry trade. Because you know, if he's worried about the dollar, well, let me ask you, you're better in FX than Warren Buffett came in.
Um,
Uh,
I wouldn't say that.
well, I am. So, if you wanted to diversify away from the dollar, would you choose the yen, or maybe you would choose something like Aussie?
Um, Now, it depends whether, yeah, if you talk long term and you want to
Yeah,
diversify away from the dollar, you
you buy a basket.
probably the most logic for a starter would be euro
Euro.
because it's the second
Yeah,
biggest block. But and yen will always be a minor, I think, currency that you want to own because if you hedge for the long term, if you look at the long term bonds, etc., you can go and then buy Japanese assets with it. But in most people's portfolio, unless you're Japanese based, but in most people's portfolio, the yen is not really the biggest one that they want to be in. Although it's a very mature market, it's a good market, of course. But yen is one. But the thing is, if you're, let's say, if you're unhedged and you have been buying Japanese assets, you have made money, but not as much as you would have made if
yeah,
you just would stick to the S&P
yeah.
and well, more S&P than bonds, but in US assets, you know.
So there's a nice little bounce back. I know this 10-year wants to get through
Mhm.
420. It's attempted, it's like, you know, it's in the basement and it's trying to break open the door above it. So uh, it actually measures what, 25, 440, 445.
Mm. Yeah, it's I don't know. Besson is always saying that they will get so many revenues, whatever, didn't that. But I think the longer end, I'm a bit worried that they won't get as much in the coffers than they would have wanted via those tariffs, etc. And that maybe 2026 we could see a bit of the medium to longer end starting to pull higher in yields. There's not too much reasons for it to bring it down either, right? Even economically seen, if you look at the fundamentals, Ryan already mentioned it yesterday. That jobs report, yeah, it's 4.6% unemployment rate, but still, if you take away the government jobs, there's still jobs creation. Inflation is still sticky. There's not too many reasons for the yields right now to get down, unless 2026 we paints a very different picture on the economic fundamentals, which is you get a labor market that crashes away and inflation being pushed down with it.
Yeah, yeah. Okay, so well, thank you for the tweet yesterday, Blake. But you know, it was 6780 was a trap door. So if you thought 68 was a trap door, you got trapped.
No,
Okay.
6780 is the level that we've written down every day. I think for the last couple of weeks on the bias chart, just because that obviously you can see it on your charts there. It's just really big support. We
Yeah.
probed it
Yeah.
yesterday.
73, I see.
Yeah,
Was a
we
low.
probed it, but we just couldn't break it.
Yeah.
So it's still there. But I would say that we're gonna have to see the way that we break that is we'd have to see some pretty high inflation tomorrow, a nice inflation print. Although here in a few minutes we have Waller who's going to be speaking, which he's still in the running for the next Fed chair spot. So it's going to be interesting to see if the market responds to anything that he has
Any
to say.
idea what President Trump is going to be talking about tonight? He just, he's
He's
having
supposed to
an
be talking
address.
about his accomplishments and things that he's looking to do in 2026.
Mm.
Okay, so no major announcements or anything like that.
No, I mean, unless he's
Yeah.
like, I'm looking to go to war with Russia, like,
Yeah,
I can't, so I can't imagine there's going to be much of a surprise, but who
yeah.
knows? I mean, that's again,
I I I heard
he's got a,
Russia has placed pretty advanced missiles in Venezuela, and no one's talking about it.
well, so that's one of the things that, you look at the bounce in crude oil, and I know people are like looking at Venezuela and they're like, okay, this is a reason for crude to bounce really off of the lows, which by the way, that 55 level is, go to the weekly chart, you can see how important it is. And just scroll back. It's vitally important to support here. Well, I guess you're there right now. Yeah, just that 2024 level. Anyway, but I think you look at like some of the headlines regarding Russia, and I was just reading here that U.S. readies new Russia sanctions if Putin rejects peace deal. I mean, so things could heat up a little bit, and I think crude oil is responding right now off of
Yeah,
those lows
485. It actually took out this low too, Blake. So
by 10,
all
20 cents or something. Yeah.
yeah, that was like a stop hunt to find. I mean, these were the last longs, right? I mean, if they, this was the bombing of Iran. Okay, this one was like a nose for Pinkert prediction. Anyway, but down here, who's long now? No one's long now.
Yeah, everybody's been pretty bearish. I've long said this, and I stand by this too. In order for us to really break down in crude oil, we're going to have to see economic data
Yeah,
globally turning lower, and that's just not the case right now. I mean, it just isn't. So I would be very hesitant being short
yeah,
crude oil down at these levels.
yeah. Okay, so why don't you grab the charts and share what you're thinking about today and what you're doing? Where's your conviction level on a few things?
Sure. Let me just get back to the charts. Well, first of all, I think we should probably talk about this inflation data that came out of the UK. I mean, how important is that for tomorrow's Bank of England decision, Ryan? Do you say?
It's probably the icing on the cake for a cut tomorrow. But I think it's what the message is going forward. Is this going to shift them into a more dovish stance going into next year? Maybe they'll cut faster, or does Bailey turn around and say, or do they turn around and say that, okay, yeah, it's one inflation report, it's a chunky one, but we need to see a bit more before we turn super dovish.
Could I mean, okay, so they're going to cut no matter what, but it's the question is, are they gonna be more dovish? But the downside that we're seeing today, following the CPI, and I know traders have ADHD pretty bad. Don't forget, like literally yesterday, your jobs report was not bad, right? And PMIs were not bad. Actually, they were better than expected. So we had, I mean, one day we're ripping to new trend highs, and then today, everybody's down and out on sterling. But I mean,
Well, it's not just sterling. I mean, you look at euro dollar; it did exactly the same thing. It went up, tapped 118, and then it fell 100 pips. So
right.
that tells you it's more a dollar story. Although obviously cable's gone a bit
By the way,
faster.
there's headlines out right now. It might be Waller speaking, I don't know, but stocks are coming under pressure right now. Everybody needs to look for headlines coming out. Kind of
Not
keeping
seen
an
anything
eye.
yet,
Yeah.
but yeah, it's a bit of a dollar story. I mean, if you look at euro sterling, we're up against 88 again, and we just can't seem to get through it. So that's the big sticky point at the moment in there.
Got it. Yeah, just so you guys can see, here's this is a 1 minute chart of the S&P. So just whatever has hit the wires is, and it did strengthen the dollar as well. We saw the Aussie just come off a few pips, euro, few things are moving. So just looking for any type of
I don't see anything either, you know.
yeah. Tricolor founder being charged over alleged fraud.
Oh,
So some of you guys may not know that. Well, actually, none of you know this, except for none of you guys know this. This is something I haven't talked about publicly. So Danny Chu, who is the founder of Tricolor, who's behind the fraud stuff, he actually traded in my office, like the office that we had in Dallas, for a couple months. And I remember him. He was he was in between things, and my one of my old partners, but also my best friend, he let me know last year. He's like, Dad, you remember Danny Chu? And I'm like, yeah, vaguely. Like, he's a guy that just kind of popped in and traded in our office, in our day trading operation in Dallas. He's like, yeah, he's behind Tricolor. And next thing you know, he's going to get thrown into jail. It's a big deal. If you guys haven't seen this guy, let me see, Danny Chu, Tricolor. This guy used to trade in my Daniel Chu. I call him Danny, but this guy traded in my day trading operation back in 1999 for like a few months. Like, he was, like I said, he was in between things. Really crazy though, really crazy story. He has done a lot of auto financing for illegal aliens, and it's crazy. It's like when you take a step back and you go, wait a second, it's like bizarro world. When you hear you hear some stuff like that. Anyway, crazy thing. I just seen his headline there. So going back to what we were talking though, just in general. So yeah, we saw the euro slip a little bit. I do want to point out, with the dollar index, and this is something that I think is rather important, because the dollar index did hit the 618 yesterday. Everybody should know that we hit pretty strong support, but also like I sent out on social media this morning, I still think that we have a double top that has not completed. Excuse me. We have a bear flag pattern that hasn't completed, and there's a lot of resistance up here. Now, tomorrow's inflation data is going to be pretty important. Obviously, everybody's looking at CPI, and I heard what Ryan and K-Man said on the Flow show. If inflation data comes in a little hotter than expected, maybe we have a little bit more of a recovery in the dollar tomorrow. But I did want to point out that there is some unfinished business up there. The euro didn't quite. We just traded above 118 to 118.05, I believe. And so tomorrow's inflation data, I do think, is going to be really important for the market. Not only that, we have many central banks that are meeting tomorrow, including the European Central Bank. So what are you going to make of all this, Ryan? Just to kind of rehash what you guys were talking about on the Flow show this morning.
Which bit do you want?
Oh, about just the dollar as a whole, maybe what we should expect out of the ECB. We just talked about the Bank of England. I know we got the Riksbank tomorrow. We have Banxico tomorrow. We have the Norges Central Bank tomorrow, I think.
wow.
I think obviously Euro is going to be in focus with the ECB. Not expecting much from them, but we do get the updated forecast, so that's probably going to be where we see any moves. Just in case they're not as hawkish or bullish on inflation, and therefore policy as some in the market are expecting. If they see lower inflation, sticking to close to their target, or maybe just popping under it, that will put a little bit of a dovish slant on things. But if not, if it's all roses and jelly and ice cream, we might see a euro heading back up to 118, and particularly if we get soft CPI data as well from the US.
Waller's on CNBC saying there's not going to be a reacceleration of inflation, and so the dollar is rolling over just a bit. You can see that the euro popped up, but let's not forget Waller he's third in line to from the betting markets point of view. And if you guys haven't seen it, if you go over to the general chat room, I posted it this morning. That's why I'm going to pull it up here. You look at here we go. This is Poly Market. Numbers. Kevin Hassett's still in the lead. Then you got Kevin Warsh and Waller bringing up the rear, but it's still important because he is influential, obviously, and he is putting a little bit of downside pressure on the dollar this morning. K-Man, has he said anything else important? I know you're throwing up some headlines there.
Yeah, he says he thinks that the rates are still about 100 bps above neutral. Well, yeah, he's his dovish self. He's a dove. He can't help. So he sees inflation coming down over the next months. Job market very soft, etc., etc. Current payrolls no good, so that's weighing on the dollar right here and now. Yeah, Mr. Brown just put it on there. There's a bit of a lack of backing for the Oracle data center, which is probably weighing a bit at the start
Yeah,
of the
that was
US
an
session.
FT article, right? And that's what really hit the S&Ps when I'm like, there's some headline out. That was that FT article that just came out, right, Kay?
Well, we
Yeah,
take out 6780, Blake. Look out.
Yeah, and I do believe that this is a really, really important support for the SPOOs, that 6780. I think it is 100 pip.
There aren't many bears out there, just like there aren't many dollar bulls.
Yeah, another point to that is that you're right. I was actually talking to one of our traders yesterday in the chat room, or on Friday, Zelen. He was asking about the dollar, and I thought this is a real interesting piece from this morning. This is from Bank of America, global
So
fund
it's still crowded.
managers. It's still crowded. It's off a little bit, but obviously long gold and long mag 7 is still
Oh,
where it's most crowded, right?
wow. Yeah,
So
that's interesting.
yeah, so you can find all this interesting stuff right in the news and research room and the Forex Analytics chat room. So if you're not there, you should be there. All right, so K-Man, I'm sorry, I didn't mean to chop you off there, but let me go back to you though. How are you reading everything going into the next 24 hours? Because we have a lot going on. Obviously.
Yeah, so I would rank CPI as the most important, but obviously for the Sterling Bank of England. Personally, we know that ECB, there's been a few voices, Schnabel, etc., getting more hawkish. But I really think ECB tomorrow will be data dependent, and Lagarde wishing everybody a Merry Christmas. And I don't think ECB is going to be the main point tomorrow. Banxico could be interesting. And then obviously we have that Norges Bank, Riksbank. Riksbank has been quite dovish over the until the last meeting where they went more neutral. Norges Bank is already neutral, so maybe a bit interesting tomorrow as well to see what the Norges Bank is doing, especially well yeah, dollar Norway is bid. But Euro Norway is at a very, very interesting level around 12, which is apart from the Liberation Day spike, it's always capped around 12 on the Euro Norway, and we are trading right up against it. So that may be interesting for the combination Norges Bank and ECB tomorrow.
All right, and
But as I was saying as well on the flow show, I think we've seen a very interesting move on the dollar yesterday after the jobs reports. Especially if tomorrow that CPI would be a bit sticky. Maybe the move that we saw over the past 12 hours may have a bit of legs for the dollar. Obviously, the data still have to come out, but I'm um, I'm I'm a bit hesitant to be short dollars right now. I want to see the number first, and I'm actually leaning slightly towards the other side.
All right. Hey, just real quick. Thank you very much, K-Man. I do, since I didn't show it, but we talked about it. Dale was showing his charts. I do want to let everybody know. I actually bought crude oil yesterday, and I added to it last night. So this is kind of a trade that I've been planning. And if you're in the Forex Analytics community, everybody should know I've been planning on this for the last week or so. And I don't trade crude very often. I don't fancy myself a very good crude trader, but I tend to call it a lot. But we were at such key support at this $55 level. I'm like, okay, we're gonna break through 55 or 56 bucks. We're gonna get close to 55. We basically held it. I turned around and went long. I added to it just as we were pushing up against 56 last night because of what's happening in Venezuela. And then today, we're basically trying to recover. And I think if you start getting above 57, then you got a bit of a squeeze. I think this is
It's a good shot.
Dale, I love finding
I'm in
people
it.
off kilter. You know what I mean?
Yeah.
So if
Yeah.
you got everybody short and you
Yeah.
get a bit of a reversal, you get above this 38% retracement, you're probably going to get squeezed back to 58, 59. And so, it's something we've walked through on the morning edge and on the daily roundup multiple times this last week, just kind of waiting for that to happen. So it is developed again. It's one of those things that if you're in the community, we've been talking about it, and it's
Yeah,
been
you
a
can't
good
just
setup thus far.
you can't just talk about it and then have it be in front of your face and not do anything about it. The only reason you would is because you have fear because maybe you're in a drawdown. But you know what? I've gotten to the point where time is more important than money. Okay, so how many opportunities are you going to have in your life that when you wait for something to set up, the opportunity cost is more painful than being stopped out. You have to have that attitude. Well, and look, you were waiting for this probably for a week or so.
Yeah, that's the thing, and but we talk about a lot of different trade setups around the markets,
So
and
that's a good
just
one.
wait for them to develop, and hopefully, some of them come to fruition. So
I think COT has a lot of shorts in there, a lot of shorts in COT.
and the
Um,
COT data, I bet you it does. Let
yeah,
me.
lot of shorts. I forgot who, someone just let me know about it. Forgot the guy's name that does COT, was in Market Wizards. I can't think of it right now, but he does a lot
Uh,
with COT data.
I'm going, and now I don't know how up to date
Oh yeah, the
due
government.
due to the government shutdown, how up to date this is.
I think they updated him last Friday. Oh, Jake Bernstein. What about Jake?
No, he does sentiment, not
Yeah,
COT data.
it's good to see him still out there.
Yeah,
Uh,
I
can't
don't know
find it.
where
Sorry.
CL is. I can't find it. I'm sure it's in here somewhere. I'm visually trying to see it, and I just don't. Oh, there it is. Okay, so here we go. So there's crude, and I mean, I guess commercials are still, yeah, pretty short. I mean,
Yeah,
well, I mean, this would be the speculators are short, so they're still
yeah,
short overall. Yeah,
yeah.
I
A lot of
guess
shorts.
a lot of shorts out there with the
All
COT
right.
data. Yeah. Yeah.
Thank you, Bob. Thank you.
All right, man.
It's
All
always
right. Well,
good
hey
to
guys.
see.
Yeah, we have about a minute. Ryan, any last minute thoughts?
No, we're lacking a bit of data today, so we might just have to be sticking around for headlines. But keep an eye on the dollar. Also, keep an eye on 10-year yields. I know you put that in the chat room.
Yes.
If the dollar's going to kick on, keep an eye on tens up at that 420 level, because if we can't get through there, it might just put the brakes on a little bit.
Yeah, this is whoops. This is the oops. That's not the chart. It's Ryan. You were addressing my chart up here. Oh, here it is.
Yeah.
Yeah. So there's the tens, and and you're right. We should be watching that very, very, very closely as we get up towards resistance.
Not the witchcraft inverse head and shoulders you've got on yields. We don't watch that one.
It's just resistance. It's just resistance. But I draw. It's a longer term. It's a longer term triangle, by the way, just so you guys know. It just shows that we're in a really big consolidation phase in yields. But
You're the Bob Ross of charting.
that's right. You can call me the Bob Ross if I had a paintbrush and a big afro. Yeah, perm. I call it an afro, but hey, whatever floats your boat. But you can see the big consolidation in yields. Anyway, great show, guys. Dale, I know you have Mr. Coleman here, which is always a really, really nice interview.
And it's important right now, Blake, because Bob's a physical dealer. Okay.
And we got silver at new all-time highs today, right?
Yeah, but you know what? A lot of people have been right about buying and stacking and things like that, but there's so many landmines that you could step on when making a physical transaction. And, not everyone's ethical. So I'm going to talk to Bob about what people need to look for when they're, dealing with a silver gold dealer.
Well, as long as Bob's willing to put his hand on the Bible and swear that he is ethical, I'm in to listen. All right, and I'm sure everybody else is here.
I did business with him, so
awesome.
Yeah, okay. So thank you, Blake and Ryan came in. Tomorrow's a big day, and we'll see how many more times 98 has to be tested in the Dixie.
Thanks, Coach.
Okay, guys.
Thanks, Coach.
All right, I'll see you guys later. I'll see you tomorrow. And Bob, welcome back. How are you?
Good, Dale. How you doing?
Good, man. So, you were, on the leading edge of what was happening in the physical markets and all the shortages, and started with lease rates just going up, and you were on top of it. I know you're looking for a spectacular price rise, but what I'd like to concentrate on is, like before the introduction, is that if people are getting ripped on spreads on both the in and out, it can mean 20% of their returns are going to dealers. So you've been around the block, you're in the business. Why don't we talk about first of all, what do you think the biggest mistake people make when choosing a dealer and making a buy? Let's start from making a buy.
Yeah.
What,
Yeah.
what,
Yeah, no, I appreciate it. And yeah, thank you for having me on, Dale. I think what I've kind of seen in my career, to kind of give a little bit of inference for your listeners, is that I came from the financial services side of the business, the industry, in terms of I've been a registered investment advisor since 1992. And when you're a licensed individual, you have a degree of you have to put the client's interest first. It's just part of holding on to that license and doing what's right for the client. But when I got into the metals business, started looking at it in 2006 and started putting metal in the fund that I run in 2006 and so forth, and then opening a depository up in 2008, I realized this industry is extremely unregulated, and there really are no there's very little compliance and oversight that looks after the client's best interests. It's really a caveat emptor type of situation, unfortunately. And what I've seen throughout my career is the louder a promoter or dealer becomes in terms of, hey, listen, it's conspiracy or it's this or it's that, it tends to gravitate and catch followers, and they almost create a new higher level status for themselves, and then all of a sudden, if they say something enough times, it must be true. And and there are a lot of businesses that have been created that way in this industry, unfortunately, and people don't look at, they may like the story, they may like, the personality of the individual, the charismatic, whatever it may be, but
Yeah.
they don't really look at the price, because they're being told this is the lowest price in the country, lowest, this is guaranteed, we match anybody's price, whatever it may be. But it turns out that a lot of these big online dealers, a lot of the there are a lot of great people in this industry, don't get me wrong, but there are a
Yeah.
lot of people that have grown substantially by literally providing a lot of misleading information. I'll say it that way. And I see it with extremely high spreads. In October, online dealers were selling silver eagles at $10 and $12 over spot. They're now bidding $1.50 under spot for silver eagles. So if you bought in October and you wanted to sell today, you've already lost, 10, 12, $14, depending on how much you paid for it, just in the spreads. And I saw that in 2020 to 2023, where I was $2 to $5 cheaper on an ounce on silver than almost anybody else advertising in the country, and I couldn't wrap my brain around it. I'm like, how can people be doing this to their own consumer base? And these big markups go to massive marketing campaigns,
Yeah.
paying promoters, paying YouTube guys, paying endorsements, all these types of things, and the client ends up paying for the business model. Unlike in the financial services industry, where it's not a perfect industry, and there are a lot of problems with in the financial services industry that obviously we see with the SEC and so forth, going after certain individuals. But the problem is, um, there's rules and laws that we have to follow, that really puts the client's interest first. There's a fiduciary responsibility that we
What's
have
a
to have.
license? So people, if you're out there and you're looking to buy or sell, is this a license that dealers would have? Is it a state license? Is it a federal license? What kind of license is it?
There is no license per se. Like an investment advisor has a
Oh,
series
okay.
65. The state of Minnesota, I believe, has some type of model just for that state, but it doesn't regulate advertising, it doesn't regulate uh, you know contracts, things like that. It may say you have to be bonded, that type of thing. But what I'm looking at is a bigger picture that says, listen, how much did the client really make if they bought in 2022, for example, and they paid $20 over spot for silver eagles, and now they go to sell it and they get less than spot. It's
Yeah.
that's why I think you started seeing selling in the retail community in 2024. It went through 2025. People are seeing right now. I see big online dealers that are buying back silver maples at and 1 ounce rounds and 100 ounce bars at $4 and $5 under spot. I mean, it's literally uh, crazy. And then they blast on their advertising that they're the greatest in the world. They're the white knight of the industry. Look at us. And then on top of all that, you see a lot of dealers that have entered into the depository business. And as they are a depository, the client that buys the metal through that dealer is now beholden to whatever the bid may be that dealer is willing to buy that metal back, or or a structured program, very similar situation.
So
So
they have a captured client by them doing that.
yes, yeah,
If you're depositing with somebody, you can't, they're going to be the selling broker.
right. And I've had you know not to name names here, but a very large structured program. A client I was talking to yesterday was telling me that either he pays he stores metal in this program in a foreign country because it sounded great on paper at the time. He wanted to get the metals back. They're charging him an arm and a leg for the shipping. He goes, well, what if I sell it? And this is gold, and I think they're like $150 under spot is what he would get for it. I mean, it literally is the client has no there's no options there. And
Yeah.
that's what I've recognized since 2008 when I got into this is when you have an unregulated industry, it is really a buyer
The-
beware, and it's
Yeah,
you know,
the Wild
it's
Wild West. That's
yes.
yeah, FX used to be that way, retail FX,
Yeah,
till
I
the
mean, like that.
regulators got.
Yeah,
Yeah.
the 1920s. I mean, the stock operator days. You had ultimately Securities Act of 33 and 34 brought into the picture because
All
because it
right.
was the wildest.
All right. So, I would say it's probably more difficult now than ever since we're at historic highs in silver. And the way it trades around sometimes, Bob, I see at times even on on the futures board, on CFDs, 5 cents between bid and offer, even on the board. It's not like they're trading in half pennies anymore now that ranges and prices have broken out to historical levels. So, how do you go about even, by the time you get off the phone and talk to someone else, how do you know you're really getting a good spot price to begin with?
Well, that's the other side. You just brought up an interesting point. A lot of online dealers will use their own version of spot price, which may be 20 cents above what the London spot price is. So there's no
Wow.
definition of actual spot price in the
Yeah.
marketplace, unfortunately. And so it's another way to skim an extra 1% off the client without them even knowing. And what makes it even worse is let's say you have a dealer that increases their spot price artificially. Well, that artificially decreases the markup on the product because now you're comparing the end price with a higher spot price, so the markup is artificially less, which is used as another ploy of advertising, unfortunately. And these are all tricks of the industry to try to promote themselves, to differentiate themselves from maybe other guys in the industry that really are very low priced, and provide a very honest quote in terms of the spot price, and are just trying to do right for their client. There's a lot of dealers out there that actually are very good, and they try to do their best to have their client make money rather than taking all that purchasing power away from the client. And that's what my model is. I've always been very competitive, one of the lowest in the country since 2009, been very consistent on that. But again, I run also a depository, so I have to look the client in the eye when they store that metal and they sell it through me. I see exactly what they see in terms of their actual profit when they sell. So it forces me to be competitive. It forces me to be looking out for the client's best interest. I don't put these waiver of jury trial clauses in agreements and waiver of class action lawsuits and agreements and these arbitration litigation uh, uh, type of clauses where if you don't go to the arbitration hearing, you automatically lose, or you have 10 days.
Wow.
I mean, there's so many landmines that it's almost impossible where to kind of educate people without taking a 1 to 2 hour type of lecture interview to kind of explain this stuff through. But the big thing is try not to just say, listen, I listened to this guy on the internet, he sounds great, I really trust him because he says everything that's checking my boxes in terms of what I want to hear. There's a lot of bias confirmation in this industry. A
Oh,
lot
yeah.
of, especially in October, when everyone was saying London's going to blow up, and LBMA is going to blow up, and the COMEX is going to blow up, and this is going to blow up, and that's going to blow up, and silver's going to go to $1,000 an ounce, and gold's going to go to 100,000. I mean, these are sales tactics, and they're done by uh, or they're kind of supported by dealers. The new thing now is dealers, creating these platforms to bring people on board that they don't vet, they don't fact check. They bring them on to basically sell an idea or a higher price to get people interested in buying more metal. And that's another issue that, I wish the industry would have some foresight to basically say, hey, maybe we should create a self-regulatory organization, kind of like a FINRA, where we can
Yeah.
kind of privately regulate ourselves to control the advertising or the markups or the spreads or procedures or other policies. But there's no impetus to do that because obviously it would take from the profit or the bottom line.
Yeah. Okay, so how about the type of metal, coins, bars? What kind of tricks do they play with that? Do they try and move you to a product where they have, of course, they would have a bigger profit margin on?
Yeah, you have that. You have also, a new product, for example, has a mysteriously much higher markup. Yes, there's a cost of producing that new product and so forth, but there's so much backdated material in the marketplace right now. There's no shortages in terms of retail product. Everyone says, well, what about why is the London spot price at parity with the New York March futures contract? Those are big bars. Those are certain situations where you have metal in the wrong place, metal trying
Yeah.
to get out of one location over to another location. So you have spreads and trades that are being put on that may pressure one leg of that spread. But in terms of the U.S., like for example, we've been selling silver rounds for 70 cents over spot when people were selling the same thing in October for $5 over spot. I mean, that's how much markup there is, and you can't make money unless you get a big move like we're seeing today
Yeah.
in silver, because the spreads when you go to sell them, these same dealers now are paying $4 or $5 under spot for that same silver round they sold you at $4 and $5 over spot. And yes,
What's your bid?
right now we're at about 250 under spot at the moment, only because the wholesalers have dropped their bids to steep discounts. So we kind of mimic the wholesale industry. So they try to keep spreads a little bit tighter in terms of and also they try to support the markets with much favorable bid and asks. And yes, there is a problem with refiners not buying back metal because there's so much metal being sold back. It's one of the reasons why junk silver is at such a big discount to spot right now, because refiners just don't have the capacity to refine 90% silver. It's much easier to refine 3.9 fine silver. And last week, for example, there was a wholesaler that said, "Listen, we're not buying back any more 3.9 silver right now." I mean, there was a lot of glut in the marketplace, and that obviously crimps
Who's selling, Bob? Who's selling?
you have a combination of two things kind of going on. As prices rise, people that have held the stuff for years are like, listen, I don't want to watch this thing go right back down like it did in 2011,
Yeah, yeah,
that type of thing. And so people are taking profits. You have a lot of people that came into the market in the 20s on
yeah.
silver, and this is a nice move. You can never go broke taking a profit. But then you
Yes,
also
Bernard Brew.
Yep. Then you also have the IRA, precious metal IRA distributions, the minimum required distributions for people that are 72 and a half, that
Yeah,
are required to take out a certain amount of money each year. You have to
right.
remember this is an asset class that has always appealed to the older investor. And that demographic is now aging where they're now taking distributions. So you're seeing that combination as well. So you see a lot of that coming back onto the market as well.
Okay, interesting. All right. So I only have one more question for you. Where's the high in silver?
I, it's funny. I know we were talking about this earlier this year, and I think you were looking at like a 50-to-1 gold silver ratio. And
Yeah,
initially I was looking for 65 at
yeah.
the beginning of the year,
Nice
and
call. Here we are.
yeah, and I think I guess we potentially, I'm thinking we could go to 85 here. I mean, you're seeing less and less time in these decade type numbers, like in the 50s and the 60s, where it's kind of going parabolic. You're getting
Yeah,
that vertical move. The outlying. Unlike the stock market and so forth, you're dealing with a physical commodity with actual physical demand out there that's really has been sort of the tailwind to this entire move. And yes, you have guys that will come in, buy the futures markets, they'll buy the options, and that'll jam the price higher. And then when those guys get out, they're fast money. They tend, when they get out, the prices may take a quick dip down, but underlying, you still have, Asia and so forth, a lot of physical buying that has continued to come into the marketplace, industrial buying. Platinum is a story that I talked about earlier this year. Platinum, and I didn't realize this, but platinum in the usage of data centers, they use a platinum coating in the hard drives, for the servers and so forth. I mean, that's obviously an underlying,
Yeah.
not to say that all the platinum in the world is being used for data centers, but it's just another supportive factor that says, listen, maybe we don't have to worry about catalytic converters as much. Platinum is a story that obviously also has the hydrogen fuel cell recognition as well. But yeah, you want to be,
that spread was way out of whack.
yeah, and still platinum is still very cheap relative to
Discount.
gold.
Yeah. Used to be at a premium.
Yeah.
All right. Well, I'm showing your website now, bro.
Okay.
All right. So they could people that are interested, you can always call Bob for a quote. It's not going to hurt you to, if you're looking around and you're calling other people, you could give Bob a call, see where he's at, and Bob will also take time to educate you if you're interested. So, like I said, I did a buy from him. It went like clockwork. So that's why I would show your website,
Sure.
because I don't want anyone to go, any of the people that listen to us to have a great idea and then get burned by dealing with someone in a boiler room.
Yeah, and it's difficult because this industry uses a lot of language in terms of, well, we don't have commissions, we don't have markups, we don't have this, we don't have that. But in reality, you are paying above spot for a particular product, and it's worth it to try to shop around, even talk to your local dealer.
Walk in.
Yeah, those guys have tons of inventory right now. You probably could get a great bargain there as well. I mean, the industry is very inventory rich and cash poor at the moment, and that's one of the reasons why what I worry about is if you do get this spike as prices go higher, you're going to get continued selling coming back into the market. How is that going to affect the industry? And what you're seeing is bids are continually dropping, and that's a worrying sign that I'm seeing.
Okay, so a lot of people that were underwater for years, in fact, they probably inherited it. Their parents or grandparents were buying it at $5, $10. I could be a grandparent. I remember those prices. So, yeah. So, I mean, people that bought a year ago have triples, three baggers. So, anyway, Bob, I appreciate you sharing your knowledge of the industry, and you're also pretty good at detecting things that are going to make the markets move. So
Yeah,
glad our paths cross.
sure. No, I appreciate it, and I follow you. You've been absolutely right on the silver market from earlier this year. So it's worth it to have different viewpoints. I think it's important, especially from the technical side of the business, the charts and so forth. They may not tell the entire story, but it's another tool at least for viewers and listeners and just consumers to maybe use as an input when looking at price action or entry points or exit points. Certainly you get a lot of questions nowadays. Hey, listen, do I take some of the money off the table? Yeah, and my adage is you can't go broke taking a profit. I mean, it cannot hurt. We're all not gonna. It's literally impossible to catch the 10% from the bottom and 10% from the top. You're just lucky if you do that. But the big thing is we're all in this to try to protect our own financial security. And it's obviously nice to see the metals having some recognition here. But you're going to see volatility just as fast as things go up. Sometimes they can pull back. It doesn't mean it may be the end of the story, but certainly just be careful how much you pay for that product.
Yeah.
As you're going in.
Yeah, it could also be insurance, although, I'm not looking forward to the day where I have to use a silver coin to buy bread and milk
Yeah.
or McDonald's.
I don't know if you could do that at McDonald's. You
Yeah,
have to go to a kiosk now to
yeah,
place your order.
would have to be, Bitcoin.
Yeah,
So, yeah.
either that or like a slot machine. You just
Oh
put a
yeah,
couple
remember?
couple co-
Yeah. Anyway, I played a great blues song. You got to listen to it. It's Loan Me a Dime, Boss Skaggs, and at the end of it, when I tweeted and I say, please make it pre-1965 if you're going to lend it. Anyway, great talking to you, Bob. So, just say, do you think we'll see triple digits next year?
Yeah, I think there's this rally that we're seeing, this melt up, I think, in the
Yeah,
markets. It is one of these types of things that could easily push through 85 to 100. These spikes that can happen, especially in the middle of the night. Anything is possible. The concern that I would have is for people that are trying to say, listen, if it hits 100, I want out. uh, the silver market moves so fast that
yeah,
when you may see that happen, if it does happen, it could be instantaneous. And at the same time, it may be like what I was talking about earlier. The bids that dealers are
yeah.
willing to buy back may have dropped to $8 and $10 under spot from $4 or $5 under spot on silver. So it's all relative, and that's like in 1980 when we saw silver at 49 and change. The bid for junk silver then was, refiners were only paying $38 an ounce for that silver because they were anticipating what the price would be 3 months out, because that's how long it took to process that material. The same thing is happening today. You're seeing a tightening of liquidity, especially right now. It's going into the end of the year. Banks will probably, they're closing their books, they're de-risking,
Right.
and so forth. And so you're seeing, lighter liquidity, and that's probably one of the reasons why you're seeing that, this volatility, sort of, $3 move down, $3 move up in silver. You see these wild moves, but more importantly, you're seeing, the EFP not very well supported. And you see that parity with the March futures contract. That's a telling sign. That's something I've been picking up on and telling people about on my X account the last few days, is that this thing was started the month out at a plus 70 cents, meaning the March contract was 70 cents higher than the spot price. Yesterday it got to parity, meaning the March contract had no premium whatsoever to the London spot price, which is telling me either
So it's
there's tightness.
backwardation. Yeah,
Yeah,
backwardation.
backwardation and tightness growing again, or there's more metal that's going to be coming out in December out of the COMEX. People are shorting the December contract, trying, because you have to remember, it's the guy that's short that controls the delivery process. So if they want to get metal out, they'd have to, and let's say it's their metal, they have to affect a short position to deliver that metal out to a standing long. So, but that wouldn't normally affect the March futures contract. So there's a lot of dynamics that are happening real time here, and I think part of it is also just year end, lighter liquidity,
Yeah.
lighter volume, that type of thing.
Yeah, be careful. This is when they have raids on both sides of the market because they
Yes.
know it doesn't take as much money to go after some stops. That's why I call myself Forex Stop Hunter. I know where your stops are, everyone. You can't
Yeah.
hide from me. Anyway, Bob, great. I hope you have a Merry Christmas, Happy Holidays, Happy New Year. This must have been a pretty good year.
Yeah, the,
Talk
the
to you.
fund, yeah, the fund I'm managing, it's up probably well over 90%, or but
Wow.
probably, well, that was as of the end of November. So Yeah, it's just and it's interesting because I don't use derivatives or options. It's physical metal, and I only really made one tactical trade this year, which I introduced platinum into the fund back in March. Otherwise, I've had about a 70%, 75% weighting, 74% weighting in silver, very
Yeah,
overweight silver.
I remember when you went overweight, we were, over 100 on the gold silver ratio.
Yeah.
That's
So
when you were doing it. Yeah. That
yeah,
was
and that
30%.
Yeah, and that's another, you brought up another interesting point for your listeners is use the ratios to maybe give yourself a benchmark to look at relative valuation to say, listen, is gold or silver or platinum cheap relative to the other metals, not just looking at strictly the price of one commodity. So that's, you bring up a good point of using that ratio to maybe use as an entry or an exit point. If silver got down, like I keep telling clients, you've never seen silver top at 80 to 1 or 60 to 1. It traditionally goes down to about 30 to 1 on the ratio to gold. And so that's one of the reasons why I thought we'd have one more leg higher. And that's why I put that post out a few weeks ago with a little yellow box comparing it to the 2010 run, where it
Yeah.
went from the teens to 26. And then once it broke through 26, that consolidation phase, then it zoomed up to 50. That's where I think we're in right now, is that leg up.
Yeah, where it looks like Niagara Falls. I was telling people, you don't even have to do anything and buy or sell anything new. You just exchange some of your gold for silver. And
Yeah.
if you did that, you made over 35%, almost 40% on that move because of what the gold silver ratio has done. So
Yes.
that was a pretty good call. Um, Great talking to you, buddy. I hope
Sure.
26 is good too. And I appreciate you coming in here and sharing your knowledge with people. You can follow Bob on X at Profits Plus ID. And here's his website, IdahoArmoredVaults.com, right?
Yeah. Yeah. Goldsilvervault.com.
GoldSilverVault.com. So take it easy, Bob. Thanks very much. I'll drop you a DM for, we'll talk probably in March.
Okay. Sounds good. Thank you, Dale.
All right. Check Bob out. You could learn a lot. He's a pretty good tactician too, as he said, by his performance in just a physical metal fund. And that's a wrap, everyone. Don't just count your coins, your bars, whatever else it comes in, your jewelry. Count your blessings, and I'll see you guys tomorrow. Adios. Okay, I'm glad you got something out of it, Ali. Bob with the gun. All right, well, I'm glad they see. I just want people not to get ripped. All right. See you guys tomorrow. You're welcome, Fred.